Recording is on.
Hi, everyone. Welcome to the DXbiz weekly meeting. And it's April 19th, Monday at 1500 UTC. Nylon's still away. I'm going to run the call today. We have a few different, on the agenda, we have a couple presentations first is from Fernando at CurioDAO. We potentially have Stasis here, who is a Euro stablecoin project. I'm not sure if he's here yet, but he might be presenting as well. And then we also wanted to get deeper into like some of the product conversations we were having and how we can use those product conversations to reach out and expand into attract interesting attention in the DeFi community. And John has some background on, one that we've been exploring this weekend, and we can see how that goes, what we've learned from it, and if we could replicate things like that with more and more projects. I think that'd be an interesting conversation. So let's and then maybe a little deeper on Swapper as well, and what kind of a plan is there. So let's start. Fernando, who is from CurioDAO. Let's say, I guess for about 10 minutes, if you could introduce yourself. And Nathan had shared a deck that I think you guys had put together, so people may have some brief background, but it would be great to hear about yourself and what your project is and how you found DXDAO and potentially what, as you mentioned, DXDAO has a lot of things we're working on, and including a platform for, initial token offerings and things. And so hearing, what kind of relationship you see with DXDAO, that would be interesting.
Right. So, yes, welcome everyone. This is Fernando Verbonen, co-founder of CurioDAO. It's a project that we launched in 2018 with the purpose to break the wall between the digital and the real world. So we're tokenizing rare assets, and we're using a decentralized autonomous association in order to handle the development of our projects. DeepDAO, which is a research house, today ranked us among the top 12 projects in terms of number of members. We have over 200 members on board already. It's growing. We're growing about 20% on a monthly basis. So what is, in essence, CurioDAO? Basically, it's an ecosystem that provides investors opportunity to invest in tokenized real assets. Think of it as a launchpad for, let's say, a tokenized car or a tokenized painting in the future. And the idea here is that over the last couple of years, we were researching how to tokenize assets in a compliant way. We became the first player to tokenize a real Ferrari. And now, once we have turned it into tokens, our users can then benefit from several features. First, they can use their car tokens as collateral in an ecosystem similar to MakerDAO and create a stable coin out of this collateral. This gives them essentially liquidity compared to, previously you would have to literally sell the car in order to get liquidity or maybe get a loan and so on. Now you can just do it instantaneously. Why or how? We connect the underlying asset, in this case the car, to an oracle from Chainlink, and this Oracle fits the real-time price. So this enables us to create a stablecoin instantaneously. So this is the first benefit. The second is, once you have the stablecoin, you can now add these assets to a liquidity pool and get staking rewards from that. So in the future, we want to have all garages, all collectors on board, tokenize their assets with us, and then generate stablecoins, which they can then use in our DeFi hub to add liquidity. And last but not least, you can now finally get access into a brand new, asset class, collectible rare cars and classic cars. And as we have now this framework that works under Swiss and Liechtenstein regulatory bodies, we can now then expand it, to any other asset class that our clients want, whether that is paintings, whiskey, watches, you name it. Now, why is this so exciting? Is because for the first time, users can now, generate a stablecoin backed by real assets or just diversify across these assets. And what we hope to achieve is that crypto investors who have so far built some wealth with their activities can now park some of these funds into, let's say, safe haven, top-vetted collectibles. Now, if you don't know anything about collectibles, you probably learn more the moment you go into curioinvest.com. But what I can tell you about them is that you're missing out, because the price of collectibles have genuinely increased over the last years. And while this is not a financial advice, the very wealthy have used it essentially to diversify their portfolio. And this was somehow reserved to them because they had all this network and expertise or contacts to experts and so on. And that's where Curio DAO is stepping in. We're making it very possible for you to just acquire a token. And we do the hard work. We store the cars at a free port. We maintain it with experts. We procure the right time to sell the asset and so on. And of course, as you engage into the Curio DAO, you become member with our association, then you will get some additional perks that bridge that digital world with the real one. Maybe we will then announce events in which you can visit, the exposition, the gallery of the cars, maybe other assets. And this is how we hope to increasingly add more assets and essentially bring blockchain to the real world. So far, we have expanded our development with wealth managers that want to push our car tokens, so-called. And we have about $1 million in sales for the first car. We have now onboarded several collectors, and we have grown the pipeline of real assets that we can launch in the Launchpad to over 200 of the world's rarest cars. So that's where we are, and our CTO will be also available today to answer some questions. In the previously, it was mentioned that there might be a link shared with your team, so feel welcome to take a look at it and reach out for any other questions. There's just one slide that I wanted to share with you if there's still some time. So basically what you see here is the main pillars of the Curio DAO. You have on the one hand the stablecoin component, on the other hand the asset tokenization launchpad, and last we're working on an automated market maker that would enable you hopefully to get additional liquidity. Let's say you want to buy or sell these card tokens in the future. Still a work in progress. It's not functional only with utility tokens, but our goal is to push it and bring it also for card tokens. We will see if we get that license for the DAO. We're built on Ethereum, Polkadot, Binance Smart Chain, and we're now bringing scale to the decentralized AMM. And this is what makes us unique, basically. When you look at where we are or how we consider ourselves, we see that it's almost at the intersection of three main, let's say, innovations. One is, of course, the whole, DeFi hub, which refers to DeFi, lending, and so on. Another one, the second one is the so-called tokenized platforms. We're talking about card tokens that represent the right to a profit. So we need to, we work together with regulators to bring a compliant setup. We have now done so. And of course, the NFT market, in which you have, it's a real world, an NFT representing a real world asset, and the respective, let's say, shares that represent a fraction of this NFT. So that's Curio in a nutshell. And where I see collaborations with your team is, of course, on the one hand, on increasing the way improving the way we communicate our product. I mean, we have partnered with several players, and as the project gains more mainstream adoption, we hope to get more folks involved on this ecosystem, but that we need to improve the way we communicate our project, right? So I have here provided one, guideline, and we're now working towards that. But I mean, we basically want to continue, let's say, improving or making it easier for our users to understand the product. And second, I mean, the project was bootstrapped by our co-founders, Valerie and Vladimir. And basically, now we feel it would be the right time after 3 years to actually use that additional liquidity to create a liquidity pool on Uniswap that would enable more members to join and experience a better trading experience as capabilities. As right now, there's a lot of the experience. The liquidity pool is small, so therefore the traders are hit by lack of liquidity. Yes.
Thanks, Fernando. This is super interesting, and just a couple initial questions I had were the tokenized assets, which are the real world asset tokens. Those are currently only can be held by whitelisted addresses. Is that correct?
That is correct. Yes.
And then the CGT token, you showed that, but is that like a governance token of the entire system?
That is correct. That is correct.
And where is that token? Who currently holds that token? And you said there's a public pool, and are you looking to do a sale / distribution of that token to the public?
Right. So there is a public distribution in the form of an airdrop that we do on a monthly basis to folks who contribute to the liquidity pool, and therefore get rewarded with about 50,000 of these tokens on a monthly basis. We have reserved an allocation of within the token economics for private investors, let's say institutional investors, and the idea is that there may be a sale after institutional investors on board, and therefore we decide together with them whether that should happen. Yes.
Gotcha. Cool. Yeah. Some in the chat, people are mentioning a couple examples of some, usually real world assets that are being tokenized that are being put into the DeFi ecosystem historically have been mainly, I think, real estate versions of tokens. So I'm not aware of many that are other collectible and rare assets like you guys are doing. It's when you lead with tokenized Ferrari, it feels in general initial impression like 2017, and people get slightly turned off by that. But I think the reason maybe why you start with cars is because it's an easy, it makes sense and it's easy. Say certain people are going to want to hold a share of that type of collectible car, I guess. But
yes, so I have two examples for the audience who's watching us. One is here, an example of the oracle from data from Chainlink. Basically, one has to recall that a Ferrari F12 is not just a normal Ferrari, but it's a limited edition, very hard to get. It was sold by Ferrari for $500, but brought to an auction for $1.5 million 8 months after it was initially sold. So there's this demand factor, this collectible factor. So, so what you see here is the Ferrari paired to a USD, and basically captures the average price of different APIs globally. And as we distribute our car token, users can flip it in a matter of moments within the stablecoin model. This is the first component. And the second component that I feel is quite relevant is the mainstream factor. I'm investing. I've invested in crypto since 2013, and our CTO Vladimir, he's very tech savvy and so on. But the reality is that the whole ecosystem would benefit from an easier setup or easy to understand setup. And cars is that one kind of niche that everyone is somewhat familiar with. At least people know a car has 4 wheels. It has a price, and now you can invest on it. Of course, and this is what surprised me the most. When we first tokenized a car, the idea, the project got featured on Bloomberg, on NASDAQ, got featured on Forbes. People were just really positively impressed. Now, if we would have tokenized a house in Estonia at a corner of the street, nobody really cares because it doesn't have that attractiveness. Of course, the idea is innovation, is innovative, blah, blah, blah. But the mainstream factor or the media factor that this got was amazing. And this was all organic. I mean, the project was fully bootstrapped by us, basically, until now. So as we now have over 200 of the rarest cars, and you're looking at these cars, they don't even look normal. Their doors open upwards and so on. They're very fast and so on. You realize that this project has the capability to get a lot of attention. Yeah.
Cool. Anyone have any other questions?
I'm just wondering, like, how do you bridge the gap between like token and real world? Like how do you enter legal system? Like, if I want to buy this token as asset in Serbia, someone owns it in America. Like, how does it work? Like,
right. So we're very fortunate to be located at one of the leading jurisdictions, leading countries in the topic of crypto. I'm referring here to Switzerland and Liechtenstein working together. And in the last 3 years, what we worked with regulators was a way to split the ownership of one asset from the economic benefit of the asset. So what we managed to get today is that Curio, or the company that we have in Liechtenstein, buys the car and becomes the owner of the car. And at the same time, Curio creates an STO and basically launches a car token offering. And in case we, let's say, raise the total funds, then the asset is purchased, the car is purchased, and then the token investors get to participate in the economic benefit of the underlying. So what this means is that let's say you own 10% of the car tokens from that particular car offering, then you get to split 10% of the proceeds from selling that car. So this is how we managed to solve the ownership problem that enable us to scale the process to many hundreds of cars without having to deal with owners who don't want to sell their car token because we found a great buyer for the car and things like that. So in the background, what takes place is that there are rules that are well defined from the very beginning, and people know when a car will be available for sale or if it's available for sale. And provided that it gets purchased for a profit, then the token investors split that reward in the form of a capital gain.
So these cars are not meant to be driven. They're meant to like just be owned.
Exactly. So these cars are, you can think of these cars as sort of a museum grade. And basically these cars, I mean, they can be driven, but of course they are maintained in this kind of warehouse. So when we launched the project, we were featured by TechCrunch. We invited them to one of the warehouses here. You get to see, basically museum grade cars. And
like collectibles.
these are collectibles, exactly. Classic and supercars, limited edition, 1 out of 100, and so on. And sometimes the price goes for a single car up to, say, $80 million. So this is almost like a piece of art, put it this way. And these spaces is what we could in the future open to, DAO members to visit, attend, and also to partners. Let's say we invite, an exchange, Huobi, or one of these big ones, and then they could, we could do nice gatherings and so on. And this is just one example. Yes.
Great. Well, Fernando, thanks for all this information, and I hope everyone enjoyed this. We should follow up maybe with next steps. You mentioned potentially selling some tokens or doing a private sale with some investors and things, but maybe potentially doing more of a public token offering, which could be a potential possibility in the future with our Mesa product. Just kind of like an token auction product. And then we also, Swapper is an AMM. So currently Swapper doesn't have whitelisting technology, but if you need whitelisted technology, that's a feature potentially Swapper. It's a Uniswap type exchange that has governance, and I guess whitelisting for like a security token could be something that we add in the future.
Right. So actually, one last innovation that I didn't mention, but we will be actually introducing in the near future. It refers to our graphing token model. So in the near future, what we will be doing is placing the car token that we in the IDO or in the token sale on the road. And we will be placing it at a vault on the protocol. And then the vault would then grab this token and create a freely traded graphing car token, WTCT. And this would enable, the grab car token to participate in any hub, any AMM or so that is out there. So whether it is the car token that we launch or just we reserve an allocation for grab car tokens, that's something for us to discuss afterwards in the second stage, and I'm sure we can work it out.
Cool. So any liquidity pools that you see around those individual wrap tokens, or like maybe baskets of those tokens, we have a farming system, so you could provide pool rewards for incentivizing pools.
Right.
And also, you have the ability through DXDAO and governance of those pools to adjust the fees. You know how like Uniswap is just 0.3%, but if these security tokens, if you say wanted higher fees like 1% or 3%, or maybe if you wanted 0%, you have the ability to through governance change the fees on the pools, and that could be useful for some of these like unique, smaller one-off like card token pools, I guess.
Right. So I think this is something to discuss with the team and understand to what extent your team can also benefit from, the exposure of these assets. What is interesting is that our community is now even asking for a Tesla. And while one may not genuinely think right ahead whether a Tesla is collectible or not, it is what the community wants, and we will get a Tesla, right? So this is something that I think is quite genuine, especially from from a DAO, and it kind of highlights what the community actually wants, and I think it's some nice example that we could run together or something like that in the future.
Yeah. So a couple of things. DXDAO would love to probably own a car at some point. And then also
that as well, yeah.
Also, your system could be interesting to capture part of the NFT crowd. There's a Crypto Motors project, which is really expensive digital cars, and so you could use your system for digital cars in addition to real world cars.
Absolutely, we could tokenize a digital NFT basically that represents a 3D model or so. That's definitely doable. Yes.
Great. Well, thanks, Fernando. Appreciate it, and we'll follow up in Keybase, I think.
Thank you so much, guys.
Thanks, Fernando.
Nathan, is the Stasis team?
Yes. Yeah, Gregory is here.
Greg. Okay, Gregory. I don't see him. If you're here, would you like to give some background about yourself and then also your project? Is he here, Nathan?
Yeah. He told me he's here. I think he's the Anon account. Gregory, can you hear us? Or we can give him a couple of minutes.
You might be on mute if you're trying to speak. Yeah, so the idea with Stasis, which Nathan provided some background, but Stasis is building a Euro stable asset, which is one of the more popular Euro ones. And I know a bunch of people in the forum had feedback about whether a Euro stable asset makes sense in this low or negative interest rate environment. That's a debate that can be had, but at the same time, DXDAO is a global organization. If there are reasons, there could be reasons for it to hold non-US dollar stable assets, which could be Swiss francs, euro, yen, or some other currencies eventually or currently. It's an interesting idea if there is one that makes sense. And I think this Euro Stasis, maybe it's S Euro or a Euro S, is an interesting project. But if he's not here, I think we'll have to.
Oh no, he just confirmed to me on Twitter that he just had the wrong link. I just forwarded him to the right place. He should join us in a minute.
Thanks. Maybe that's him.
Hello,
Gregory.
guys. Yes.
Hi.
Hi. How are you?
This is the DXDAO business development call, weekly call, and we have Nathan has shared some information about your project in our forums and our threads and our chat channels, and so it's great to have you here. And DXDAO in general has a plan to diversify into non-ETH assets, so other stable currency assets, and mainly we've been looking at US dollar assets, right? And so it's interesting for your project to come along, and DXDAO is a global organization. We have a lot of people in Europe, and so understanding, if in like the next 10 minutes you could give some background on yourself and your project, it would be interesting to understand if DXDAO holding a Euro stable asset in the ecosystem makes good sense, and potential opportunities around liquidity pools and incentivizing those pools and helping to grow your product as well.
Sure. Thanks for having me here. I'm sorry I'm a bit late to join, but my calendar link apparently had the wrong Hangout meeting. So just a bit of perspective. My partners and I, we started investing and trading crypto 7 years ago. We built the world's first Bitcoin fund, and our motto has been institutionalization of the space for years. So I was a big believer of institutional capital participation in digital assets since 2013, 14, 15, and Euro stablecoin saw life as a product in the summer of 2018, right after the first kind of major retail bubble in the cryptocurrency space. And I think we are the biggest non-dollar digital assets right now. we have quite a healthy roadmap of future developments. We've got our own non-custodial wallet, which is very convenient to access EURS. We have acquiring APIs, so one can even process card transactions into EURS. We have an automated on and off ramp, both through APIs and through the mobile apps, web apps. And our total emission is around 50 million. When I started this thing, I thought we would reach 1 billion in the first year of operation, and I was right about the stablecoin market in general, which is around 40 billion now, give or take. But it's very skewed, as you know, in the dollar market share. I think for the reasons that all crypto assets are mainly priced in dollars, traded in dollars, and the world still is very much glued to the dollar. And this is another mission I see for myself personally and for our project, is to give the world an alternative, because I'm a big believer of an alternative. I was a hedge fund manager for more than 15 years. I traded derivatives and equities and options and futures and all that stuff in a global macro strategy. And after the global financial crisis, the year 2008, 2009, I just capitulated with the belief that capitalism in America is the strongest formation on the planet. And I started searching for an alternative. I started thinking what could be an exposure to hedge against the excessive monetary policy US is advocating. Now, last year, that fear, that biggest kind of trigger came into effect when US started spending trillions and trillions of dollars, now accumulated almost 4 trillion of budget deficit rolling 12 months, which is astonishing and incredible together. And I want to continue to deliver on this mission to diversify people and traders and protect capital of users who want some dollar alternative. And this is why I'm building EURS. It's a product. It's not really a business. As you know, the rates in euro are negative. So we are running a money market portfolio of fixed income securities backing our tokens. We were never under collateralized. It's always one-to-one. And another thing about EURS, we have zero EURS as project ourselves. Because I was involved in several regulatory task forces across Europe. For example, I was a member of the governmental task force in Malta, which created the Virtual Financial Assets Act, and now becoming kind of a typical regulation that's kicking force across other European member states. But going forward, I foresee something like e-money 2.0 regulation across Europe, where there'll be a very strict monitoring of the conflict of interest. And from day one, I totally exempted our company, our employees, of trading EURS asset on behalf of the company. So we have zero market making activity on the markets. Everything you see is organic and user driven. Maybe that was another kind of reason why the token hasn't increased faster in amount and circulation. That we never made order books for across exchanges, or we never participated in the trading on the secondary markets. It's all kind of user driven, as it has to be. Like if you were to imagine a perfect asset, the demand and supply has to balance each other. So our job is to provide APIs and on and off ramps, predominantly for institutions. We're also facing retail clients, although I anticipate going forward we'll add some additional fees to transact with them, because as you know, in Ethereum, the fees are quite high. Imagine some retail person buying 1,000 euros from us. He sends us, first of all, we have to onboard him, right? We do all KYC, ML checks. We are fully MiFID II compliant. So that's already a cost. Then he sends us a 1,000 euro right? We send him 1,000 euros tokens and pay like $30 or euros for a transaction fee on top. So obviously that's a loss-making transaction for us. We're not making any profit out of it, but we continue to execute on it. We continue to service customers because, again, our mission is to give markets a dollar alternative asset. As for the roadmap going forward, I think we will be launching on faster blockchain. I cannot name the blockchain yet, but they contributed to our equity capital, and we are rolling out soon on a faster blockchain with lower fees. And that's also this asset will be available through APIs. And another thing is I'm considering adding a virtual cards, Visa, MasterCard issuance in the Stasis wallet. So users who hold EURS as a salary payment, for example, and we've got several clients who send salary in euro to their employees, crypto-related projects. Of course, they want an easy way to spend them, these euros, and historically they've been cashing them out into, say, neobanks like Monzo, Revolut, and
Gregory, just real quick, sorry to interrupt, but can you talk a little bit about the swap, the Uniswap pool, I think, that exists, and potentially, Swapper is a DXDAO's AMM that we've built, and it has farming as well, so reward pools. What's your strategy around? And you can control the fee of the pool. So if you want a very low or a higher fee, is that something that would be interesting for a Euro-S pool, especially if maybe DXDAO held some Euro-S and put in, what's the other side of the pool? Like, what are the two? What's the pair? And then what's your incentive strategy to incentivize AMM pools?
Again, our strategy is to provide the most transparent non-dollar asset. That's our biggest value proposition. Non-transparent, fully transparent, zero conflict of interest, digital alternative to dollar. We have never made any ICO. We don't have any kind of project token that's kind of traded on.
I think his question is how can it help us? Because we have our own Uniswap fork, and so what could we do to drive that liquidity there? Or is it an opportunity for what's the opportunity for DXDAO?
Yeah, I think if you offer some look at Curve, look at DFX, look at Balancer. Once these guys added some incentives to EURS pools, they immediately got liquidity there. So there is basically a market demand for euro yield, as you might imagine, right? Because the euro yield is negative. So we've got multiple institutional clients, high net worth individual clients who would like to deposit euro and generate some yield. So if you add some incentive on top of the EURS liquidity without impermanent loss risk, I assume you will have definitely hundreds and hundreds of thousands of EURS hunting your protocol, your platform. Look at Curve. They added the EURS pool, and even after the synthetics incentives discontinued, the pool has, I think, 60 million of assets. So quite, I think, interesting value proposition for people who hold some EURS and want to allocate.
So you like having a bunch of different pools across different products, and in those cases the different systems are each creating their own incentive rather than focus on one major pool or something.
Yeah, exactly. Our job is to expand the ecosystem. My personal mission is to increase fungibility of EURS stablecoins. So I wanted to be present into major DeFi protocols, major exchanges. I never paid for any listings because I don't have a budget for that, but I always communicate clearly what our goals are, what the strategy is, and when I find like-minded individuals, entrepreneurs, projects, we do collaborations. On top of that, we have a community which totals around 70,000 people from all over the world. We have like Africa, we have Asia, we have Europe, and of course collaboration with Stages brings you some traffic because we spread the word about these pools or these incentives or this particular trading or investing opportunity that arises with US.
Great. Well, that's a pretty good overview. I don't know if anyone here has any specific questions for Gregory. Yeah, I think DXDAO needs to figure out if holding a euro stable asset makes sense, and if so, this Euro S seems like a good one, and that could lead to a pool on Swapper, and then eventually a potential incentive to grow that pool as part of a diversification strategy and attracting interest to that pool.
Mm-hmm. Do you use any layer 2 scaling solution, or is just an Ethereum?
Yeah, so DXDAO is thinking continuously and is expanding into a multi-chain world. Like we have a bunch of our products on XDAI as a side chain right now, and Arbitrum is a true layer 2 that is our core focus for having our products, and so likely Swapper would be on Arbitrum as a layer 2.
Mm-hmm.
Is that an L2 that you guys are focused on?
We haven't. I mean, I know there were several attempts or exercises to experiment with the EURS, and we had requests from some layer 2 solutions to upgrade the smart contract to remove kind of the commission second transaction that we had previously. So we did that, and I think Matic was researching an opportunity to add rewards to some EURS pairs inside the Matic trading counterparties, but nothing has been fixed, finalized yet. From our side, we always happy to talk, to discuss, to provide transparency about what we do, help with on and off ramp if necessary, and
great.
Yeah, like spread the word about it.
All right. Well, thanks, Greg, for that presentation. We'll talk internally. You can join our Keybase and our forum and follow the discussions and join. And I think we're going to move to the next topic now.
Mm-hmm. Sure. Thanks for having me.
Yeah. Thanks, Gregory.
Have a nice day. Bye.
Bye.
Yeah, so the next topic in general is getting, now that DXDAO's products are becoming live and more usable and getting more capital, I think there's more opportunities like what happened this weekend with, I don't know if John, if you want to give like a brief overview or just the example of how, you know, DXDAO can kind of inject its products into like current event DeFi ecosystem projects and products that are coming out. We've had, you know, a few scenarios of new tokens that launched on XDAI and making sure we have a swapper pool and spreading that around and things like that. But I think we can probably do more of that, especially once we have farming live. We can tie in, you know, DXDAO's capital with incentives from the projects and things. So I don't know if you want to like give any background on that.
Yeah, talk a little bit about that. So I think, you know, watching for the time I've been watching crypto, one of the biggest forces that drives the success of exchanges is like new listings. Like if you go far enough back, you know, Cryptsy, some people probably don't even remember it because it got hacked and went out of business, or it was an exit scam or something, I don't know, but they listed all kinds of stuff and were successful for a while. Then it was like Poloniex, right? Like I think Binance became really successful through their listings. And then you've seen certain like market leaders like Coinbase kind of have to play the game a little bit to like fend off the competition to the new listings. And I think Uniswap is probably one of the biggest reasons why Uniswap is successful, is the ease of listing, essentially, right? Anybody can do it. Tokens listed. You look at Uniswap today, what's the most traded token? It's one that launched like a few weeks ago, right? So I think like one of our focuses from a business development perspective when it comes to Swapper in particular is to like, you know, play in new listings and to focus on new listings and new tokens and think about what can be done there. Now, if you take a step back, like Mesa launching, I think that's going to be awesome because that puts DXDAO in this capital formation process, and like hopefully that flows into new listings on Swapper. But yeah, anyways, and farming also will help you. And so anyways, I was like checking out this project called Cryptex. It's got some, well-known like people involved, like Preston Van Loon from the Prismatic ETH2 client team is one of the founders, and they're doing some farming now. Like, just to describe the project briefly, it's a maker-like system where you lock up either ETH or DAI collateral and can mint a synthetic asset. The one they are starting with is called TCAP. That's tracking, or supposed to be tracking, the total crypto market cap, and they use Chainlink oracles to kind of feed into their system. I think getting from like CoinGecko and CoinMarketCap and the like. So it's Cryptex. Let me type it in here. Cryptex.finance is their site. And so they are doing farming right now to issue their governance token. It's fair launch. And I noticed that the CTX just hasn't actually traded yet, even though it's being farmed. And so I just thought I'd mess around, and I created a pool on Swapper for CTX and the synthetic asset TCAP. So you can see that is on Swapper. Now, like, it's a little expensive to create a pool on mainnet. So I don't know. I mean, something that we can maybe think about, like, how could the DAO incentivize new pool creation? But yeah, I don't know. It's just an interesting, I think, biz dev exercise. I'm in their Discord, and if you go to CTX Talk in their Discord, they're kind of like, "What's Swapper? Like, why did you create it on Swapper?" And like, I need to get back and actually answer those, like, kind of give the pitch on why Swapper is a good product. But yeah, I think it'll be interesting to talk about and think about. Like, I think we should be thinking creatively about how to get involved. So actually, the last comment in the CTX Talk is like, what will be the CTX price? So I think what the next thing I'm going to do is create an Omen market on XDAI about what will the CTX price be, and I'll use a scalar market, and then I'm going to drop it in their Discord and say, well, here, you can like speculate on it, on the price right here.
Yeah, so that's a great case study, John. The question is, how can we get, like, speed is what matters in situations like this. So the only way that I could see new pools to be created on Swapper that are funding with capital is, like you said, through like an open incentive that if people do this, they know they will get a reward and / reimbursement from DXDAO, right? Because DXDAO itself would not be able to do these things fast enough. Theoretically, DXDAO could assign an amount of capital to a subcommittee or something, which would probably be a multi-sig, to have capital to create some pools. So like almost like the equivalent of an Omen squad that could be fast acting. Otherwise, it would have to be pretty good incentive that's publicized in order for people to do it themselves, right? Like in your scenario.
I love the idea of reimbursing and refunding a pool launch, just because like that. I mean, that seems kind of like a way of supporting Swapper, kind of doing that, and like obviously Swapper DXDAO benefits a lot from that.
So cost of pool launch of creating mainnet pools, we could definitely make that open and known. What about, like, you also need initial capital to make the pool at all relevant, right? So how do you handle that piece?
So that's where the farming could be interesting, right? Where we could target specific projects. I think we have to be targeted about it, but oh yeah, go ahead, Makana.
Yeah, I love what you did there. I think it's really important to find, like, always the next big thing and basically get in before the next big thing, governance token, even has a price, like you did. But you have to do it with major capital. So like Sky was saying, I think we could, like, think about this in terms of DXDGen and basically allocate like 1 million for DXDGen and have like 3 or 4 people where one of them is technical and looks at the risk basically of getting rug pulled, and the other guys are just hunting for the next big opportunity. But even if we're doing that, you still have to go both, like it's by DXDAO, but also you have to have some good incentive for the degens to do it, because when I degen into it with 1 million from DXDAO, I'm basically fucking myself, because now I'm getting less rewards. So yeah, you need some pretty good incentives to do it. But I think it's a great marketing strategy, and yeah, awesome.
Paul, what you just described there is obviously a very complex situation.
We lost Sky there.
Yeah.
Yeah. Yeah, I mean the amount of, obviously, like I didn't have like the pool is not very big right now, and then the incentives is an interesting question. If you look at like what they are advertising right now, they're only incentivizing minting of TCAP, and they're incentivizing a TCAP ETH pool on Sushi, but they're going to start incentivizing a CTX, which is their governance token. So CTX is the governance token, TCAP's the synthetic. They are not incentivizing any CTX pool yet, but they said in their Medium article that they will be incentivizing a CTX ETH pool. So I imagine once that kicks off, like that pool is going to like easily dominate, right? And it would be difficult to compete with that. They also, though, in their Medium article said, oh, and then some other pool will be incentivized and we'll announce it later. So I also think there's like some chance here of like, it's essentially a biz dev effort. Like if we can convince these projects to use Swapper, like that's what another one of the challenges, right? Like if they chose Swapper as one of their incentivized pool, that's huge for us.
Yeah, I think we kind of want to swim a little upstream, right? So it's not so much like when it appears on Etherscan or when like the farming starts. It's like, how do we get and talk to those groups before, when they're kind of like planning all that, and then get them on Swapper. And I think we're only now in the place to be able to do that because we have Swapper existing and working now. So yeah, maybe it's just like that biz dev effort of kind of getting and attracting those initial pools. And I guess we also did this, like Radical was another example of, we had some really good, probably like one of the best volumes on mainnet, and it wasn't even that big of a pool, right? It was much smaller than Uniswap, Sushi, and Balancer, but just because it was a new pool, it was seen lots of activity. So yeah, Basket DAO is a good example actually. That would have been great actually. I actually think like that, just Basket DAO, because like that's kind of the perfect example of like, basically it's like people are trying to do like alternative versions of like existing DeFi primitives, right? And so like the DeFi Pulse Index one, I think Basket DAO was like trying to do a different version basically of that, and kind of, it wasn't exactly a vampire attack, but something similar to that. And I think those are the type of projects that may be willing to venture outside of Uniswap and SushiSwap.
Yeah, one of the interesting things is that they already, if you go to Cryptex's site, they are showing this a SushiSwap pool and a Uniswap pool. So I think this is another advantage for Swapper, right? Because if they are incentivizing and doing like observing pools across exchanges, Swapper now is actually a great interface to use, because you can see SushiSwap and Uniswap, and you can do the trades through either of them. But yeah, I guess like the big hope would be that they would actually incentivize like a Swapper pool. And I mean, I think the chances are probably kind of low, but I mean, who knows? If enough people started using this pair, then like maybe it stands a chance. It's also a question of like which pairs make the most sense. Like I think they're going to be incentivizing an ETH CTX pool, but then like, having the synthetic against the governance token, I don't know how much that makes sense. Like one of the reasons I did it is because I figured like everybody farming it has both of those tokens kind of just sitting there. So maybe I could tempt them to do something with them. But yeah. Sky, were you saying something before you got Wi-Fi cut off?
Yeah, well, you may have mentioned it, but I was just talking about the risk involved with using DXD capital to ape into new creation swapper pools for like these unknown projects. There's a lot of risk there, which you probably mentioned, but
yeah, there is risk. But I mean, if like, so for this as an example, right? If DXDAO had allocated $1 million of ETH to farm it, you could actually, accumulate a decent amount of the governance token with very low, like little cost to DXDAO. The risk there is the smart contract risk, right? Like, is it going to get hacked?
yeah, and who's making the decision? Because does the DAO? Because if the DAO has to decide, that's too slow. But if it's already allocated to like a small degen team, then it's on them. But if that $1 million gets rug pulled or it's lost, like that's $1 million lost. That's
this might be a good use case for like a guild, so that it's still like a decentralized governance structure, but it could potentially move faster.
Yeah, and one of the guild members should be like like an auditor, basically, like someone who can really read code really fast and make an informed decision, basically.
Yeah, I mean, we could even potentially like hire audits. Yeah, I mean, we could potentially like at least de-risk it to some degree, right?
Yeah,
and this project actually has an audit, so you can look at that and see.
And then again, there's another case of like thinking about it as a marketing expense. Like this is like the greatest marketing you can do in crypto next to farming, basically.
Yeah, exactly. And I actually think like yes, it's a risky endeavor, but if DXDAO is putting up 2% of its capital and it's a good, there's high potential in marketing, like I think that could be reasonable, right? Like worst case, the $1 million is lost, right? And there is some chance of that, but on the other hand, like to be relevant in the market, like we need to do things aggressively.
Yeah, Martin's raising a point to like compare this risk to some like it. I guess Martin,
I can speak for myself.
Strategy,
I don't see it. If there's like well-tested contracts out there which don't have this high risk profile, and then I looked like that for me it looks like we are not willing to take this kind of risk, and then we make like take a part of the treasury and go full risk. So I don't understand, why we are so hesitant to other risks then. Because
first of all, we're not hesitant to earning 30% yield on Yearn. There's a live proposal to do that. It hasn't been approved yet. We haven't done it yet, but earning 30% on the stable coins that DXL holds on Yearn is a great thing that I think everyone agrees with. So we want to do that, right? And then the question is, we want to do DX Ventures, which we could lose $1 million in DX Ventures. And so then the question is an additional strategy, the degen, like farming in order to create new pools on Swapper, which help Swapper get attention. So I think they're all valid.
It's just more about our risk profile, which is quite unclear then to me in a way. It's just,
Well, yeah. I mean, I think we're kind of in more hypotheticals. I think this is like definitely like a good, I guess we're probably not going to farm this one specific, but maybe it's something that like as a project comes in the future, we can be ready to act. But it seems like it's kind of very based on the specific project and the context of that one.
Couldn't we just, I mean, obviously that's like an economic question, and you guys have been all working on treasury diversification, and this could fall into that category. But also we can kind of do as we've been doing with similar things. Like I consider DX Ventures to be pretty risky. We're making an assessment there as far as like what we're doing with the money and whether we're actually expecting a return on it. So I think that we could, express that very clearly in a proposal to the community. And, we have to really listen to feedback, and we could even, try to utilize Snapshot again or something, some sort of signal from DXD holders specifically about how they feel about something like this until we have DX vote up.
Yeah, it would be good to get some signal from DXD. I would say that we definitely have gotten a few comments here and there that to the effect of like DXDAO is not aggressive enough with its treasury. But to Martin's point, like I think, yeah, like Sky said, I don't think we are necessarily opposed to doing a yield on, I don't know, at least I wouldn't be opposed to getting some yield on Curve. But I mean, I think if you're looking at stablecoin yield, you would probably be looking at a larger chunk of money than $1 million, right? And yeah, even though the smart contracts are maybe well established with Yearn, there's tail risks just by like the way that Curve works, right? Like if Tether goes belly up, then the whole thing kind of falls apart. So like there's different risks to assess too. But I mean, I just think like you have to manage it as a whole, and having some relatively small percentage, like less than 10%, doing risky stuff. If that risky stuff is like towards business development and really like pushing the products, then like that sort of, I think, makes sense.
Yeah, agreed. It's just, I'm more risky. I'm into the risk. If we can take more risk, I'm in. But I don't know. It's different for me as a private person or for the DXDAO. And I just was thinking that DXDAO is somehow conservative and maybe should be, but yeah.
Well, I think we can be conservative with the majority of the treasury and risky with a small part of it, and that still, like as a whole, is pretty careful and conservative.
I think one factor is also how fast we can execute. Of course, if you have like a smart contract problem, then it's anyway too late mostly. But for other cases, it's not. But yeah. Okay.
Yeah. Yeah, it definitely needs to be able to execute like reasonably quickly. That's why I think maybe a guild could be good for this, because you could set a quorum such that it could move relatively fast, but still be in control of like a relatively decentralized group of people.
It's also good to consider how activities stack up so that we don't compound on risk, rather diversify risk.
Yeah, exactly.
Great. We're a little over time now. People have a couple other meetings. So unless there's no other immediate topics,
just quickly to mention, I had a chat with Liam Horn from Optimism and ETH Global. They conduct the Scaling Ethereum hackathon, and so he proposed this low-key sponsorship so that we get DXDAO in front of hackers in a marketing capacity. So I thought we could because we don't have a properly formed marketing department yet. We don't have a marketing head, and we don't have a marketing budget, so it's kind of early to talk about it. But and there's still time, because Scaling Ethereum runs till the end of May. So just keep it in your minds to cover it on another call probably.
I also just saw Arbitrum is doing. I'll post it somewhere, but they're participating in that hackathon too, and are doing like a presentation, I think, tomorrow. Yeah. So I mean, everything right now is scaling Ethereum. So it's like all the exciting things that should be happening in the space. Like really, it's going to be a lot of things being built there, or ideas that are tossed around there.
Yeah, Nathan.
John posted that there's a workshop in about half an hour, or is it starting now? Or
in about an hour. Yeah, on scaling Ethereum, Arbitrum. Yeah.
Oh, that one.
Nathan, I don't know if maybe I missed it, but if you have some details about the type of sponsorship that DXDAO could do, like the cost or what it gets, that'd be good to share.
Yeah. I mean, who would be interested to form a group and discuss this in Keybase internally? Like anyone apart from Sky?
Yeah, I'd definitely be interested. I guess either the layer 2 channel or the marketing channel would probably make sense.
Good. All right.
Yeah. Cool. All right. Thanks everyone for coming.
Thanks. Bye.
Guys.